Hey traders, welcome to another global macro update. We're going to be going over a bunch of different economic statistics that are coming out, as well as a quick look at the charts, looking at S&P, looking at the different indexes around the world. So first things first, from yesterday's video, we got our new report for initial jobless claims. A lot lower than the forecast we can see, but hey, or higher, I guess, a lot higher number of people who are actually unemployed and getting unemployment insurance, but that clearly is not been affecting the market too much. This is a weekly statistics that comes out that has really had no effect on the market. We'll look at the chart here very shortly. But first, I wanted to discuss inflation around the world as a avid cryptocurrency market participant, I guess you could say. Obviously, inflation is a hot topic, talking about the Fed going brrr, printing as much money as they can, as they want, which obviously is inflationary over the long term. We're looking for that velocity exchange. We're looking for the second ingredient for true inflation to be coming into the market. But right now, around the globe, we're not seeing a lot of inflation. We're actually seeing deflation, meaning that the prices of goods and services are actually going down in Brazil. Very, very minimal. This is monthly and then yearly. Canada, actually deflationary. China, deflationary. Germany's basically sitting at nothing. Greece, a little bit. India is actually deflationary. Japan, no surprise there. We've talked about Japan a lot. Russia's basically even. So we're not really seeing big numbers here. South Korea and Spain is deflationary. United States is actually deflationary this month for the month of March. And overall in the year, we're not really seeing a whole lot of inflation for the inflationary yearly basis. So just in terms of how much the actual price of goods and services are going up, you're not seeing huge price increases just yet. And why is that? There's lockdown, goods and services are not being used, transactions are not taking place. There's a huge nosedive in the velocity of not just the United States currency, but currency around the globe, basically. Not every single country, but a lot of the first world countries are facing very close to deflation or very low amounts of inflation. So, we saw this yesterday, just talking about it, total vehicle sales. They will be coming out with this month's very soon, so we'll see how that goes. March was an absolute capitulation. We'll see how this upcoming month will be for the vehicle sales. I presume that's going to be even lower than what we had in March. 11.4, then we're going to get into the 2008 era right down there. So we'll see how it goes. Personal consumption expenditures, we see it decreasing. We see people are spending less money. We see that in Q3 2019 and then Q4 we got a bit of a drop, and then Q1 2020 we're already seeing a significant decrease. So I think this will slow down even more. Consumers will be consuming less due to A, the fact that a lot of places aren't actually open, and B, they're saving for a rainy day because they don't know how long this is going to go. They heard about their friend losing their job, their brother, sister, whatever it is, and it's very uncertain of an economic situation. So in my opinion, as a individual living in society, at this time you're not going to be living beyond your means. You're going to be living within your means, saving for that rainy day, because it's a very uncertain time right now. We got the GDP numbers yesterday. Right here, GDP for Q1 forecast was -4. It was actually -4.8. But hey, apparently that's good news for the market. We actually went up that day. How the hell does that make sense? No one knows. We're a complete fantasy in terms of where the economics are, what numbers we're seeing versus the actual price action of the S&P 500. We've been seeing this number increase, seeing more and more people file for unemployment as the correction has taken place. So yeah, as time goes on, I'm kind of throwing out fundamentals out the window, to be completely honest with you, because we've seen the numbers get worse and worse. We're not really seeing much of a change in terms of the actual direction and momentum of the stock market. So at this point in time, I'm going to be mainly focusing on the charts, the price action, not really going to be going and looking into the fundamentals, because right now, the market doesn't give a single shit about what is happening in the real world economy. It's just saying everything's fine, there's not a problem. We actually posted this, which I thought was somewhat relevant in terms of what we're seeing within the market. Let's just zoom up a little bit. This is currently what I think the market is doing. the economy, the true economy, it is up in flames. Obviously, lockdown, oil prices absolutely in decimation. A lot of oil corporations cannot make a profit. They have no more supply. They can't put it anywhere. They have to pay people to store their what they thought was an asset, but is turning out to be more of a liability in terms of how much it's costing these companies. But there's a lot of shit going down, and it's not very positive. And the only sentiment for the bulls is it's priced in or it's forward looking. Where how do you know that it's going to get better? COVID, the lockdown, there's no real definitive date when we're going to get out of this lockdown. We've seen authoritative countries like China really aggressively try to curb the spread, to eliminate the virus, and they're still having troubles. Right? They try to open up the economy and people are not going out. People are not going to restaurants. There's still social distancing that has to take place. It's not like it's a flip of a switch and the economy will be 100% fine and dandy again. I just do not think that is something that can occur. So I'm going to have my short bias. I'm not going to be looking for longs. And yes, I could be losing out on this bounce, but hey, this is my bias because of the actual numbers that are coming out. Not this fantasy land that the stock market is going to get held up by newly printed money and the Fed is going to save the day and everything's going to be fine and dandy after this goes away. How the fuck is that possible? I don't think it's possible, so I'm going to stick with my bias, even though I did take a loss on the SPX within my swing trade. I've accepted it. I ate that loss. I'm happy to do it, and I'm going to stick with my bias because there's just no fucking way that we're going to get out of this economic situation in my personal view. All right. This was the initial, so this is brand new people that are coming in. We recently got another 3.94 million people who filed for unemployment. Right? These numbers just seem like they're made up, but these are real people who are losing their jobs and getting a paycheck from the government because they can't work. And this is continued. So if you think that this is going down, because a lot of people right here when the lockdown occurred, that was the most amount of shock. Now you're getting the people who don't necessarily need to lose their jobs, but the companies can't pay for their salary. So they have to let them go because business is not doing good as they used to because the revenues are decreasing, the profits are getting squeezed. They have to do something, and that would be laying off people. You can see the stragglers of the company still laying off people, and the continued claims. This is adding on is increasing. So we're seeing, 18 million people, if you're continuing the claims. 18 million fucking people who are just now unemployed. That's absolutely staggering. And what number will be important, I think that's going to be coming out, is going to be the non-farm payroll and the unemployment rates in terms of a percentage. That's going to be coming out next week. We can see right here. Obviously, this is not going to be the exact number because we don't know, but in terms of what we could be seeing for the unemployment rate, expectations for the April unemployment rate are in the 10 to 15% range. That's crazy shit. Look at how fast 2008 was, right? It went from, let's say when it started, December 2007, January, March, spring of 2008, we saw 5.6, 5.8, and this is on a monthly basis, right? We started seeing it slowly rise, 5.4, 5.8, 6, 6.1. This is the biggest jump, 6.1, 6.5, 6.8, 7.3, 7.8, 8. You see a slow rise in the unemployment, right? You're seeing that. It seems steep, but it's not that steep. If we even zoom out further, you're seeing each month there is a steady rise, which is somewhat normal looking if you're looking at the grand scheme of the unemployment rate. But what we're seeing right now is, let's just go back to where we are. Let's zoom in a little bit more. And this is 2008, right? We saw how steady that was. Our previous was 4.4 for March. What we're expecting is between 10 to 15. So this line is going to be a straight fucking line up all the way to around here or even higher. So if we zoom back all the way to pre-1950s, 1948 was when this chart was created. We're going to see more people unemployed as a percentage of the total workforce than any other time pre-1950. This is Great Depression numbers in the shortest time span we've ever seen. So this is why, in my opinion, it's still a shock to people. Like, people can't accept it. I just don't really understand. But looking at the actual economic data that is coming out, the economy is going to be a worse shape than we saw in 2008, we saw in 2001. It's going to be comparable to the Great Depression. In my opinion, yes, other economists are saying this, and I agree with them, because it's not just a fairy tale question that is derived from absolutely nothing. It's looking at the hard numbers that are coming in through the federal government, looking at how much of an impact this has on the economy. And we can see it's completely unprecedented. These numbers are breaking charts. Look at this chart. It literally broke the chart. We've never seen a number like this ever. And the entire time this chart has been around since pre-1970. It looks like it's completely flat before this number. And if we take it out, it looks relatively normal, right? How normal does that look? Like a lot of other charts. It goes up and down. We have these highs. We have these lows. The economy's been going somewhat steady. And then we get 2020. Just unbelievable. Absolutely unbelievable. So, yeah, that's personally my view. We also have next week the NFP, non-farm payroll. If you don't know what it is, I believe this measure accounts for approximately 80% of the workers who contribute to GDP. The measure provides useful insights into the current economic situation because it can represent the number of jobs added or lost in an economy. So we see a little bit of a dip. This is dating back all the way to 1939. Wow. So then, yeah, you see these dips. 81 was a dip. 2008 was a dip. 2001 was a dip. Let's just go to the previous couple decades here. This is excuse me, I'm going to get a little bit of coffee and then I'll continue on here. So this is 2008. We got a pretty big dip. This was from February to March. We got a little bit of a dip. Surprising, because we really started at March was when we really started that capitulation. So this upcoming month will be a very important one for the NFP, although I don't really know how much it's going to impact the actual markets, because some of these larger corporations within the S&P are actually holding the S&P up. Look at Amazon, Microsoft, Google, or Alphabet. A lot of these companies that are able to provide services in the digital space are actually doing really well. Amazon broke all-time highs. Microsoft is doing really well. So yes, some of these companies are actually keeping the market up, but yeah, in my view, it's still somewhat of a confidence game. You can't have this many people losing jobs, complete lockdown, and that's just COVID. Look at oil. It's just does not make sense to me that it's continuing to go up. So that's not a problem. I'm going to hold on. I don't really have any exposure within the S&P. I don't mind sitting out, waiting for a better opportunity to enter my short trade. But for now, I'm just sitting on the sidelines. So let's now go to the price action of the S&P. First, let's go over the daily chart. So this is where I got stopped out. We did see the wick go above the 61.8. I just closed it and saying, hey, I think it's gone a little bit too far, especially when we've got above the 2880 zone. When we broke above this, let's just take a picture and just discuss what I was thinking during this whole market move up here. So let's just take a picture of the S&P. Initially, I had here, 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 and here as a nice level of support, and it did hold for a while. We got a pretty big gap down right here, which I was pretty happy about with my short, and then we got a pullback validating this key level of supply. We did get this candle right here closing right at the 50% level, leaving only a wick. That, in my opinion, I did add more size on the Discord when that came into fruition. I did not have this trend line coming in just yet. And then it started moving up, and we saw initial job loss claims come into the market during kind of this time, and we saw the price really not get affected by it. And I was kind of thinking to myself, scratching my head, There's a lot of people who lost their job. The economy is obviously not doing great. Lockdown is still fully in momentum. I just don't know why it's going to go up. And it's still continuing to go up. Once it broke this level, I definitely was a little bit worried. And when that open came in of the high, I said, you know what? Right now, I don't feel comfortable and I don't have nearly as much confidence in the market to go down. So I'm going to take off my position, eat my loss, take that as a learning experience and say, you know what? I have favorable risk-reward situations. As long as I'm able to nail one entry, if I take one failure of a trade or even two failures of a trade to get that good entry, I'm willing to hold it because the risk rewards are very favorable in my personal view trading this current setup. So that's basically the kind of overarching view that I have. We're still in the supply zone. I'm still not going to change my bias just yet, but I'm very cautious of entering longs or shorts because I just don't know what's happening right now with fundamentals looking bearish, but obviously the market's still moving up, grinding on this little support line, so I'm just not ready for an entry just yet. So looking at the futures or the CFD contract for differences, which are 24 market on weekdays, not actually 24 hours, but very close to it. But we can see there's less gaps in the market, and then let's just take a picture of it yet again to discuss what we saw. So we got a break in that support, and now what I'm kind of looking for is just failure of a move to the downside, but the main level of support I'm looking for is 27.50, around there. That's going to be the main level of demand that I'm going to be looking at. The price could continue to go up a little bit higher, hold this trend line. I'm not really looking for any shorts because I do think if the momentum does turn to the downside, and there is worry of another leg down, it'll be a pretty quick fall from the major structural support that we've been holding, which is around 27.50, to at least 22s or like 23s, somewhere within this range of that low. And that's a very significant amount of profit that we could be looking for if we're able to manage our risk, maybe get a 3, 4, 4.5 risk reward, looking at the risk here, looking at the potential reward here. It's looking pretty favorable, right? But ideally, because I was too early for my short for the S&P 500, as well as the fact that the sentiment is looking a little bit more bullish in the short term, looking at some biotechs and some pharmaceuticals gaining some traction for momentum to the upside, looking at some earnings that wasn't great, but they beat earnings on some of the major tech stocks. So I'm going to remain very patient. I'm now using this resistance. I guess if it extended a little bit further, it was a support, but we don't really need to say that. It initially was a resistance, turned into a support, turned into a support, turned into a support, and now it is currently used as a support. But at this point in time, I'm not really looking to short the market. I'm waiting for more of a confirmation and momentum to the downside before I look to really add on any more size. But right now, just looking at this to see how it reacts, because right now we are holding a previous resistance, which is now going to be new level of support. So I'm seeing how that works, seeing how that reacts to the prices, or the price levels. But at this point in time, I'm going to be very cautious. I'm going to patiently wait, because if we look at previous market crashes, it does take some time for it to start to correct. But we can afford to have 1 or 2 losses in this trade, because we know that if it does inevitably go back down, our risk reward parameters we're setting for ourselves for our trade plan allow us to be profitable trading this setup, even if we lose 1 trade or 2 trades. Obviously, if we lose 2 trades, our profitability for this setup is not going to be favorable. It will be profitable, but not to the level that we'd like. So this next trade, this next entry, we'll definitely want to be patient. We'll want to be making sure that we have a high dependability for this next trade entry, and we'll notify our Performante Premium members for this setup. But basically right now, I'm going to remain a little bit more patient. My bias is still bearish. We went over the economic statistics that are coming in as we speak. They're not looking favorable. They're not looking great. They're looking bearish. They're revealing the underlying outlook and health of the U.S. economy, which is not great. Yeah, that's basically analysis. I hope you enjoyed it. I don't really have much more to say. Yeah, let's just see how it goes. I will be looking at the comments in the YouTube section, but I will close the recording and then I'll post it within the YouTube section below. So thank you very much for watching. I hope you enjoyed it. We've been getting more engagement within the comment section within the YouTube. I appreciate it. Some people were real kind and gave some nice warm-hearted comments in the previous post. Didn't mean it to be like sympathetic or anything, but just kind of providing depth into the actual reality of trading, because I know that a lot of people assume that trading is this get-rich-quick scheme that takes a month to turn your $100 into $10,000, and then in the next month you're going to trade it into $100,000, and you're going to be a millionaire super quickly. And you just need to follow a simple signal service. You just need to follow a simple trade plan of crossing MAs, RSI's divergence, whatever the case may be. And it's really, really more than that. It's to be completely honest, a lot to do with psychology. Once you kind of grasp the TA, the fundamentals, and kind of how you build narrative into your trade plan and have bias and be able to manage your risk, manage your portfolio for a long period of time, that's just all learning through someone else. Like, someone can teach you that. But for psychology, for understanding your own self, that shit is another level. It's another ball game. And I think to some degree, you can't really get taught how to manage your own psychology. Yes, you can get tips, you can get tricks, you can get tools, you can get ways of trying to mentally reset, trying to change your bias and all that stuff. And it is helpful, but it's a lifelong process. It really, really is. And you got to learn the hard way. You got to learn from failure. You got to basically reflect on pain you've had and say, okay, I don't want this feeling again because it really was shitty. How do I make that happen? How do I try my very best to not feel this pain again? And yeah, Ray Dalio's book Principles is a great way to try to identify and solve those issues, because yeah, if you don't get to the root problem of them, you will continually make that mistake. So thank you very much for watching. I will be going over the YouTube comments, and until next time, have a good one, traders.